if gold or silver drop in price after I order it?
Well, everything fluctuates with time, but nothing has held up longer and better than gold and silver throughout all the changes that have happened in history. Your first ounce of silver is at spot price, and you get free shipping on any order over $99 at sdbullion.com/RP.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions. Welcome back, Reluctant Preppers. We have a returning guest today. Alasdair Macleod is the head of research at goldmoney.com. He's here with us again from the United Kingdom to talk with us about things that are developing in the world economies that are going to affect us and our risk posture as we go forward. Alasdair, thank you for joining us here again on Reluctant Preppers.
That's my pleasure, Donegan.
The last time we had you on, we spoke at some length about the coincidence of trade wars at the top of the credit cycle, and you talked to us about why that's especially risky for the health of our financial systems going forward. And we also talked for what was going on in the Brexit or not scenario. So before we get into our other topics for today, can you bring us up to date on both of those?
Yes, sure. Very, very simply, on the credit cycle with trade protectionism at the top of it, things are developing very much, I think, as we discussed last time we spoke. There have been growing signs of an enormous slowdown or stop, if you like, in global trade, and it has also affected the underlying economies of trade participants. So countries like America, like Germany, who have depended on trade either way, national trade slowing is actually impacting on their domestic economy. And the statistics are still coming out, and I believe that over the next 3 or 4 months, we'll see that we are definitely sliding into something deeper than just a very, very mild recession, which, of course, is what the central banks would really hope. And the first action of that will be for the central banks to ease on monetary policy again. That won't work. It didn't work last time. And consequently, inflation will begin to pick up after that, probably in the last quarter of this year, and pick up quite noticeably. And at that stage, I think that the central banks will panic because it has enormous funding implications for governments who are getting themselves hugely into debt. So it's a process that is continuing. As far as the stock market is concerned, I think it's having great difficulty breaking up into new high ground. And my view is that as it loses momentum, it'll start going south. And that's rather like what happened in April 1930, which was the last time we had this coincidence. You had the initial hit in the October of 29. You had a recovery that took you through to April. And then you had the big unremitting slide down to the low in 1932. So I think that we could see the same sort of pattern. As far as Brexit is concerned, things are moving on. We've got the European elections this Thursday, and Nigel Farage has done a brilliant job of organising his new Brexit party. He's not talking about trade or anything like that. He's just talking about pure democracy. He's saying that the British Parliament have failed to deliver democracy, and therefore they do not deserve votes. They should be shaken up and reminded of who is actually their masters. So this is actually a very, very clever, if you like, cross-party uniting policy, and it will be no surprise if he does extremely well. And there will be very, very few Conservative and Labour MEPs left in Europe. Not that it's intended that they should be there for very long, but I mean the whole thing has been just so disruptive, not only for us but also the European Union. And I think it's brought home to the Conservative Party MPs, the more supine ones, if you like, that they've actually got to pursue Brexit and not muck around with ideas of something in between. And the way the law stands is quite simple. And that is, if there is no deal, then there is no deal. We go on to WTO terms, and they're not nearly as frightening as the establishment has tried to tell us. So that's the update. Watch those European elections. Then there will be a leadership challenge, in my view, within the next 2 weeks. And I think that the odds-on favourite is Boris Johnson. He's been working very hard to win over Conservative MPs' support. He's got the support in the constituencies, but he needs to get the support in Parliament, and he has been working very, very hard on that. He's also, this is interesting, advised by Lynton Crosby, an Australian, who advised the new Australian government how to win their election. Lynton Crosby has a very good track record of getting people elected. He understands the electoral process extremely well, and it's I don't think that he's actually an official advisor for Boris, but they are certainly talking, and rumour has it they're talking almost daily. So. I certainly see the way he is playing it is very good. He's keeping a low profile. He's top of the list. He's not saying anything to upset that position. He's not inviting media comment. He writes a weekly article in the Telegraph, and he avoids writing about Brexit. He writes about other things. I think, in a sense, to try and keep a sort of controlling position in the leadership stakes. And I have to say that so far I think his strategy has been faultless. But he is not that popular within the parliamentary party. That's the first hurdle he's got to get over. He has been hosting meetings with virtually all the Conservative MPs over time, trying to explain, his views and so on and so forth. So that may bear fruit for him. We'll have to see.
I'd like us to turn, if we can, back to one of the things you mentioned in passing. You said, based among other things, on trade protectionism actually starting to cause or show faltering in the overall economies, even domestic economies and the global economy. How you see, and the response to that from central banks being predictably easy money policies and QE and reducing interest rates. We've heard more often about the impacts, the real impacts to people's lives of zero interest rate and negative interest rate policies. And if you could take us into that, because Europe, in a few examples, may be ahead of, call it ahead, let's just say farther down that curve than the U.S. But could you talk us through what the real impacts are on people's lives, ordinary people's lives, when near zero or negative interest rate policies are pursued and pushed farther?
Well, there are two aspects to this. The one is the theoretical economic aspect, and that is that interest rates effectively represent the difference between me possessing something today and the promise of you giving it to me tomorrow, which is more valuable. Ownership of it is more valuable. So ownership of money, which represents all the goods and services that we buy, is actually more valuable than the promise to pay at some stage in the future. So there has to be a discounted value on that future to give you the if you like, the comparison between today and tomorrow's values. The idea of zero interest rates or negative rates flies completely in the face of that fundamental fact. And this is something which I don't think is actually fully appreciated by what I would call the modern mathematical economic community. Mm-hmm. They just think of it as a sort of mathematical thing. If you just make money cheaper, then people will go and borrow it. The money supply will expand. GDP will go up. And the only thing you've got to watch is that inflation doesn't really go with it. Mm-hmm. But actually what has happened is that by ignoring that fundamental economic rule, you have taken away profitability from the banks. You have, because it has been basically a policy of funding government cheaply, it has taken bank credit expansion away from the underlying economy and redirected it towards governments, which is complete waste, or if you like, destruction of wealth. Because the other side of this inflation is that you're taking, effectively, you're diluting the purchasing power of individuals. And that's something which no central bank actually takes into account, other than they claim that they would like to see a rate of price inflation running at, say, 2% or something like that. Right. But you know, I mean, the thing is nonsensical. And if you just want proof of it, look at where the European Union is as an economy, as a whole economy today, compared with where it was before the Lehman crisis. It's certainly no better off. I would also argue it's considerably worse off for most members of the population. Very hard to measure something like that because obviously, you know, with technology and so on, you do get progress. You get technological progress irrespective of what's happening to the money. Mm-hmm. But the fact of the matter is that by debasing the currency, you are taking wealth away from the producers in an economy, from the people who produce. You're not helping them at all. And if you take wealth away, then the ability of the economy to recover and produce things for everybody, improve everybody's wealth, is very seriously hampered. And so that is roughly what's happened in the EU. And I can be absolutely certain that if we move towards negative interest rates in somewhere like the United States or even Britain, it won't actually resolve anything. It'll just make things worse.
How do we see any specific examples of how we see that playing out in countries that actually have adopted negative interest rates for any period of time?
Yes, just look at Germany. In Germany, the sort of 10-year bonds yield almost zero. 2-year bond yields minus 0.6% or something like that. That's when I last looked at it, which admittedly was a little while ago. Deutsche Bank is on its uppers. The largest bank in Germany, you know, and Germany is the place where there is least lending risk, if you like, in the whole of the European Union. Because it has got the Mittelstand, it's got this enormously productive engineering production. I mean, they really are top quality manufacturers of what they do. Germany is not really a risky place. Yet you just look at the share price of Commerzbank or Deutsche Bank, and they're languishing at lows. And they're languishing at lows that tell us that actually those banks are probably in financial difficulties. That shouldn't be the case in Germany. So how is it that zero interest rates, negative interest rates, have not improved their lot? It hasn't. If anything, it's made it worse because they have no margins in their business anymore. That's one of the problems. And of course, when you've got you know, the government effectively paying you 0.6% to lend them money, why lend anything to the manufacturers? And so you can see that you know, if you like, the Keynesian concept that you just got to shove money into the economy to get it going, it's just not happening. And basically, you end up with a broken system with negative interest rates. That's probably the best way to sum it up.
So you've talked about how that affects large banks, for example, or manufacturers, large companies that would otherwise need to fund their capital improvements, that sort of thing. But how does it boil down to the individual person? So if I'm an ordinary wage earner, and how does negative interest rates affect me as an individual?
Well, basically what it does is it devalues the purchasing power of your wages. It devalues the purchasing power of your savings. So you're just getting poorer and poorer and poorer compared with the real world of rising prices. And incidentally, when it comes to rising prices, these are so under-recorded by the international CPI statistics that they're completely meaningless. And not only that, but you cannot, I mean, this is one of the mistakes, if you like, of mathematical economics. You cannot capture human action, as von Mises put it, by trying to sort of work it through equations, by trying to work it through statistics and all the rest of it. And my favorite quote was one of Lord Canning, which he made back in about 1820. Before we had all these modern statistics, he said, even then, I can prove anything with statistics except the truth. I think that's something we should really bear in mind. I mean, we have all the sophistication. I mean, and we use the statistics all the time. I mean, I go to St. Louis Fred and, I get all that stuff down and so on. And I just have to remind myself, from time to time, okay, this is interesting, but it doesn't actually prove anything. Certainly not the truth.
If we could press a little farther into this, so as an individual in a world of this new upside down world of zero and negative interest rates, it's not, if you look at the sort of protection measures that an ordinary person might take, just commonsensical things they might do, like saying, well, if the bank's going to charge me to hold my cash and they're not even holding anything physical for me, they're just keeping my savings balance and it's going down while the longer it sits there, I'll just pull it out and hold it in physical currency. At least it won't be being charged money for holding it. But in the cashless society pressure we're under, can you talk to us a little bit about even that avenue of sort of protection of of one's own personal finances is being taken away from us?
Sure. Well, I will say at the outset, I don't give investment advice.
No, but just how this dynamic plays out on individuals. What evidence do we see of honest to gosh, non-conspiracy theory, but cashless society direction, and what that looks like to the individual person to live in a cashless society?
Okay. Well, the cashless society, in a sense, is being brought upon us by technology. I haven't been over to the United States for about 3 or 4 years, but over here, we just take a credit card and we just flash it at a machine, and the transfer happens. We don't need cash anymore. And I see people buying things for less than £1, using a card. Mm-hmm. You really don't need cash anymore. This is worrying because the poorest members of society who cannot get bank credit, who probably don't have a bank account, they're out on the streets, sleeping on the streets, they exist on cash. They need cash donations in order to eat some food. I was going to say put food on the table, but they haven't even got a table to put their food on. Right. So it is the poorest members in society who are hit worse by this move towards the cashless society. I think that's a very important point. Okay, we're getting a cashless society by default. We're not quite there yet, and central banks will continue to keep cash, if you like, as part of the monetary system. So, but what they will do is they will instruct banks to limit withdrawals. Now, the reason this is important is that if you get a problem within the banking system, the last thing you want is a queue around the block of people trying to take their money out. So very strict, perhaps increasingly strict, strictures on withdrawals are likely to come in. The government, which is meant to be separate from the central banks, will also support this because they see cash transactions as a means of tax evasion, and that is something that they want to clamp down on. I mean, after all, governments are spending more than our taxes. They need every penny they can get, and they will believe that they are thoroughly deserving of your money. So they will do anything to make it difficult for you to hide it, including cash. Now, this throws up some interesting points because if, let us say, you have your money in your bank and there is a systemic crisis brewing, and you think, I'm going to lose my money if I leave it in the bank. Now, you could take the view that the deposit guarantee and so on and so forth will, mean that you get paid out and all the rest of it. Sure. But do you want to go through that hassle? Maybe, maybe not. So what you would probably do is you would give someone else the problem. You would buy something with your deposit, with your checking account, in order to get rid of the money, rather than just because you want to buy something. And that is what happens when you get a systemic crisis. It is also what happens when the purchasing power of the currency really starts going through the floor. I mean, this is something that has been written about in Germany, for example. People would just do anything to get rid of the cash. People stealing a wheelbarrow and leaving the cash behind, all that sort of stuff. Mm-hmm. We can't do that with cash. Now, the effect of this, I think, is interesting because if you can only do it by passing on the parcel to someone else, that someone else doesn't necessarily want the cash either. Right. So what you will get is potentially a far faster collapse in the purchasing power of money in a cashless society than you would in a society which uses cash a lot, such as Germany during the Weimar inflation. So it could actually be very, very quick. So you've got a combination of two things coming here. One is the desire, if you like, to get out of money and get into goods, the crack-up boom, as it used to be called. And the other is to get the hell out of the banks because you're worried that the bank might not repay you. And those two things going together could actually act quite quickly. I don't know that it will. I mean, this is uncharted waters, but I'm just alerting people to this possibility. I think the way in which I get out of it, basically, is I run my life in physical gold. Gold money, I have an account there, and my money, if you like, is kept in gold, and I spend it out of gold. That is what physical gold is. It is money. It is to be used as money, as spending money. The investment side is the secondary thing, and people who just think gold is an investment actually haven't got the plot. It is money. So that is one way to get out of the banking system, because you've got to have your gold outside a bank. It's got to be held in custody, and you've got to be able to draw on it at will in order to convert it into paper currency to buy whatever it is you want to buy. So that's the service that we offer. The other thing that's very interesting is the role of cryptocurrencies. And with cryptocurrencies having risen quite sharply in recent weeks, this is now, I think, coming back, if you like, in terms of overall attention. You've got economists who are turning around and saying, the whole thing is an absolute scam and all the rest of it. Yeah, but paper currency is a scam as well. So, I don't necessarily think that you should disregard cryptocurrencies on that basis. I mean, in my view, having thought it through, I think cryptocurrencies have exactly the same status, if you like, as paper currencies, fiat currencies. The only difference is that the government compels you to use a paper currency, but nobody compels you to use a cryptocurrency.
Well, there's some debate about the limited supply as well, but some people counter that by saying just because one particular species of crypto might have a limited supply, you could always come up with another variant of it or whatever. So, yeah.
I think the point I would make about cryptocurrencies is that I wouldn't regard them as money in the sense that you can go out and spend it. I mean, there are places where you can go and spend it, and I'm sure as more and more people latch onto them, you'll find people who are prepared to accept it. But if measured against paper currency, it's the only game in town and really going through the roof. Are you going to spend it? No, you're going to. Gresham's law. You're going to spend the fiat money first, I think. So, but it is interesting because that could become an escape route for particularly millennials, if you like, who don't have an ethos of sound money, but begin to understand that the fiat currencies which their government issues are unsafe for two reasons. Firstly, they issue it in increasing quantities, as we will see as the global economy turns down on the cycle argument we were talking about earlier, and also because the banks are not a safe place to keep your money. So I think cryptos are very interesting in that sense. I see it as potentially the most enormous bubble the world has ever seen. I may be wrong. It could be that the authorities manage to get together in a G20 meeting within the next few months and agree a rapid plan to outlaw all cryptocurrencies. They could agree a rapid plan to stop banks accepting payments from people selling cryptocurrencies or payments going into cryptocurrencies. They could try anything like that. That is the risk that you take with cryptocurrencies. But it's actually very hard, I think, for governments to coordinate that sort of action. I can see that some governments will be quite in favor of it. I can see other governments standing back and say, well, hold on a minute. So I think that the bubble story is probably more likely than the banning story. Now, if the bubble story is right, it's one of the first bubbles we have ever seen which isn't tied to a region or to a specific type of investment, like the dot-com bubble. This is something that could be global, and furthermore, you can just do it on a mobile phone. This is it. Essentially, you have the potential for some 7 billion people to play in this game. And what's the other thing is that institutions are beginning to play in this game. So I'm, okay, it's a huge, great bubble, and it's going to get more bubblicious. But I can see that, if I was a fund manager and I was sort of gradually becoming convinced that this was the only game in town with everything else going down, then perhaps I might set up a crypto fund. But whatever I can persuade my compliance manager to allow me into an existing fund, which would probably be in the form of futures or a regulated fund or something like that. So, I think the potential demand is there. The organized money hasn't got into it yet. It's beginning to look at it. It's beginning to try and find ways of getting into it. Very, very early stage.
Well, Alasdair, before we let you go, if you could give us one more perspective of what you think people could watch for in the real economy. People go through their daily lives and they're interacting with real things and real people, and they go real places. What can people watch for in the real economy that will give them a clue that something is definitely shifting in a new way that might result in that line of people at the bank that they don't want to be the last one in line about to try to withdraw their cash?
Yeah. Well, I think the first thing is watch the stock market. If the stock market looks like it's really taking a dive, then the whole financial system is in difficulties. The other thing, obviously, to watch, which most people are very close to, is the value of their own homes. Those are priced on the back of mortgage rates. Now, I don't see mortgage rates rising. I think they will probably fall in the very short term. But you're likely to get a situation where they toughen up on the criteria for lending. So, in essence, there could be mortgage rationing in the market, even though interest rates remain low, which could undermine the market. So watch that. And the other thing is just keep an eye on how employment is developing. If you find that factories are having to go on short time, if you find that factories are closing, and so on and so forth, you will begin to get an idea that things aren't quite right. Stuff, if you like. But I think the first indication will be a sliding stock market.
It's interesting because some of those things you mentioned are known indicators that the government either manipulates. Well, I'll just say that they track heavily, and they may be involved in certainly the inflation indications and employment statistics that we're given are officially through the government. So people often go to shadowstats.com or other places to get alternative insight into what might actually be behind some of these statistics that we're being told.
I think what you're saying is that this is there are reasons why the government are trying to control the information in these areas. And that's actually the reason why you should watch them quite closely and don't trust what the government says.
We've been speaking with Head of Research at goldmoney.com, Alasdair Macleod. Alasdair, as always, thank you for joining us here on Reluctant Preppers.
That's very much my pleasure.
Hey, Reluctant Preppers. If you haven't heard, we've already started our monthly 1-ounce U.S. Silver Eagle thank you gift to one active Patreon subscriber each month, signed by your host, Dunnigan Kaiser. And you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/reluctantpreppers.